and welcome back to another episode of Inside the Markets. I'm your host, Sunlight, and today I'm joined by Professor Satoshi. So, watch on to find out about his background on options trading, his thoughts on the macroeconomic environment and how that affects the crypto market, and any tips and tricks for newbie traders. So, welcome to the show, Professor Satoshi. How are you?
Thanks for having me on. I'm doing fine.
Good, good. So, should we jump right into things? Could you give us a little introduction to yourself and how you got into crypto trading?
Yeah, for sure. So Professor Satoshi is my online name. Some people call me Prof for short. My background has always been in finance. I studied finance in New York City, and then I worked on Wall Street for 4 years after my college years, mainly doing consulting work for the bulge bracket banks. I did various projects with these banks, everything from like SEC reporting, which has been a big topic these days
Yeah.
in the crypto community with the SEC, trade settlement projects, algorithmic trading, testing, KYC, ML controls. But the thing that excited me the most was definitely working near the traders on the floor. And the last thing I'll mention that I did in my corporate years was researching CBDCs, which if we want to talk about, we could talk about that later.
Yeah, absolutely. That's definitely an overarching theme that we're seeing globally. So yeah, we could talk about that later as well. But I actually wanted to ask you about what kind of use cases in crypto are you seeing currently that excites you the most?
I think that's a good question. Because and to understand that, to unpack that question a little more, I think it's important to acknowledge like what we've built so far, in our sort of like around decade year existence. Stablecoins is, believe it or not, an invention. Um, and right now we have two major players that consist of, I think, around 100 billion in market cap between USDC and USDT. Um, the US dollar has kind of become this like quasi like crypto. Everyone always wants to back their stablecoin with the dollar, because it is like a quote unquote a stable currency. And that kind of the market kind of demonstrated that for us. And I think it's important to acknowledge that we've built this kind of like amazing piece of technology where you can send, if you're, let's say if you're in the US and you have family, I don't know, in Australia, and you want to send some money, doing that with a bank is a nightmare and it costs a lot of fees. Whereas you can do that same exact transaction with stable coins on a network like Ethereum, or if you want to pay less fees like Polygon, Matic, you can send money cross borders internationally with very little fees. And I think stablecoins is something that, we should not ignore, even though it's just kind of sitting there. But it's an amazing invention that we have in crypto using blockchains. The next thing I would say is basically near instantaneous atomic swaps. So this is a major breakthrough because if if anyone has worked in a bank before or around like trading systems, everyone knows T+2 settlement, which is like a nightmare process. Um, people using Robinhood or any broker really, um, all they see on the front end is like, oh, buy and sell. But behind the scenes, there's a lot more than just buy and sell. It goes through a whole process of trade settlement. And what we've done with crypto and the use of blockchains is, it's not instantaneous. It takes as long as the blockchain needs to confirm that transaction, but it is way faster than, two to 3 days. Sometimes it's 3 days when there's things that go wrong or awry during the trade process, during the trade settlement process. But with blockchain technology, you can swap, euros to Ethereum, Bitcoin to Ethereum. Like it's just amazing. So I'm really happy that we kind of have that major breakthrough using blockchains, and it's used pretty much daily. And a cool component of that is also there's no KYC, no AML. That's also a concern for the regulators. But for various users that might be impacted by their local jurisdiction. There might be some regulations that, prevent them from using certain tools to swap. That kind of circumnavigates. I'm not promoting if you're in a jurisdiction, but it could be very helpful for you depending on your situation. The third thing I'll mention is that there's been, um, and this is kind of more recent, decentralized trading. So everybody knows what happened with FTX in November of 2022, and that really really hurt a lot of people, families that had money on there. And so with that, kind of sparked the rise of decentralized trading and increased adoption of decentralized trading. And I think that's really important because, like I said, like I mentioned before, there's a lot of people who don't have access or don't have the ability to sign up for a platform just because of where they are. And to some, that's not fair. And to some others, that might be just because, oh, that's just how the way things are. I kind of lean more on the side of like, that's not fair. So decentralized trading is a creation that we have in our industry that kind of enables these people and unblocks that. The fourth and last thing I'll mention is kind of giving us the lay of the land of where we are today is lending and borrowing. So with any kind of like financial infrastructure, lending and borrowing is a key component of this, and that also increases liquidity across the entire ecosystem. And then also you can earn maybe some percentage of yield as well, which makes it exciting. I think that's kind of like a cornerstone of crypto in our industry. What excites me coming in the future is I think NFTs kind of have a useful application here in with real estate. I think there's ability for an NFT to represent a deed, and it would be really cool to enhance what we currently have with lending and borrowing to build another product, and that is like a mortgage product on chain, and to link that somehow with like an NFT deed.
Yeah.
Um,
And I
I'm
guess
not,
that it would make fractionalization of, housing easier as well, because I don't know if you know, but in the UK we have something called like, well, it's just something the way you own a part of the house, not the whole thing. I guess that would be really useful as well.
yeah, that definitely increases like um the the democratization of
Mm,
like ownership because
yeah.
actually we have actually done that in the traditional equity markets as well. Some people can't afford to own $1,000 Google stock or share. Actually, I don't know if they did a split. I think it's not even trading at 1,000, but before their splits, before their many splits, um people were that definitely was not in the range of possibilities for a lot of people. But now that you can actually split shares and you can own fractional shares, just like how you mentioned with real estate, definitely you can own fractions or pieces of a piece of real estate. And that
Awesome.
enables that's what this technology is about. Like it's about the democratization of your finances, being able to own pieces of everything. It's all tracked. So I think that's something I'm really excited for. Um, and I actually think there are projects working on this right now.
Oh, awesome. Yeah, it would be interesting to see how they pan out, right? Actually, so kind of back to what you were saying about CBDCs. Obviously, the question was what current use cases are you excited about? But CBDCs aren't really like in use at the moment, are they? So what do you think about that?
Oh, CBDCs is something I researched for a long time, and it actually inspired me to actually be more bullish on Bitcoin and crypto. Believe it or not, 80% of central banks around the world right now are in the research phases of CBDCs. Um, these countries include China, the Ukraine, Uruguay, Thailand, Sweden. The EU is actually pretty far along. Of course, the US is quite behind. Nigeria, um, South Korea as well. There's 80% of central banks have resources dedicated to researching CBDCs. And I stopped my research on CBDCs because I couldn't for the life of me, after, 3 years of research, I started this in 2017. I couldn't figure out the anonymity component. Like, if it's supposed to be a cash, kind of like a cash replacement, cash is private. Like, if we exchange cash, the government doesn't need to know. No, your friend doesn't need to know that we exchanged, whether it's dollars or whether it's renminbi or Japanese yen or Argentine pesos. No one needs to know. But with a CBDC issued by a government, where now this is the legal tender that you have to use, we at least in 2017, when well, I actually abandoned the research of CBDCs in like 2019, late 2019, early 2020, because we couldn't figure out how do we make this thing actually private. And that really concerned me because I knew that the governments are going to go in this direction, with pretty high conviction, because it just makes sense. Like, our money has been becoming more and more digital, over the last decades, and COVID-19 also kind of um, boosted that as well. So that really scared me because there's a book, I think it's 1984. It's like Big Brother's Watching. And that really spooked me because this kind of reminded me, like, hey, maybe there won't be drones, or maybe there will be drones surveilling us, but maybe the surveillance might not be through drones, but through money instead. And that really frightened me. And that kind of made me even more bullish on Bitcoin. And I kind of went all in on Bitcoin because of this research that I did in my final years in corporate.
Yeah, amazing. So, I mean, it seems like no one apart from the governments have anything good to say about CBDCs. Why are they pushing it?
So um, there's actually a lot of reasons for the use of a CBDC. It kind of gets technical with the central banking component of this, and then if your government has like a treasury component as well. But the main thing is, I'll give you an example. So let's say that the economy is going through some sort of depression, which I think in the headlines on the Wall Street Journal or Bloomberg or any, like, you're hearing all this talk about a recession. So during a
Mhm.
recession, the central bank has a couple responsibilities, or a couple things that can help alleviate this recession. And one of those things is, there's a meme called printing money. It's technically issuing debt, but what they can do is they can send you this CBDC directly to your wallet, right? Um, and they can program this money to be used for specific things to boost that sector of the economy. Now, we had a form of this, right? In 2020, when COVID happened, no, the entire world global economy shut down for basically like 6 to like 12 months, depends which parts, but yeah, about 12 months. And that's a huge shock to the economy. And what they did, governments around the world, they airdropped is a good word, money to your bank account so that you can pay for rent, so that you can buy food, so that you can do the essentials. But a lot of bad actors use money to buy, um, maybe GameStop, maybe Bitcoin, maybe Ethereum. But now with CBDCs, they can program that money to be spent for, let's say, food, right? Something critical in a time of need, or rent to your landlord, right? Um, that's really special with the CBDCs that is not currently possible with our current money system.
God, that is actually very dystopian and terrifying, though.
Yeah, and they can make the money expire too. So
Mm.
let's say, okay, wait, let's allocate $1 billion across all the citizens. Um, and this money expires kind of like an options contract in 3 months. You have to use it on rent only, right? Okay, now that we have the landlord satisfied, let's move into the next line item. Okay, it's food. How much food does the average, I don't know, EU person spend? It's this much. Okay, we'll give them that, like, this much, and they have to spend it, we'll kind of deploy this contract to CBDC, whether it's US CBDC or Euro CBDC or Chinese CBDC or whatever CBDC, right? We'll deploy it at this rate so that they can kind of survive by eating, food that they need on a weekly basis. And, I mean, it sounds dystopian, but it actually, like, this type of concentrated, um, I don't know if you want to call it a monetary system. It sounds dystopian, but actually with this kind of injection of, let's just call it assistance, government assistance, it's much more focused and it kind of reduces the bad actors of 2020 where they're buying um Gucci bags or things that are not critical, right?
hmm Okay, yeah. I mean, I guess there's two sides to everything. So,
Yeah, for
yeah.
sure.
Right. So actually, you mentioned options trading. I've had, quite a fair few people on the show, and they seem to prefer options over any type of other trading. So could you tell us a bit about why, you trade options?
Yeah, absolutely. So I think in any trader's career, you start off with spot, then you graduate to futures or perps. And then the final stage is kind of like options. For me, I went from spot trading to options mainly because like when I was trading equities, I was primarily trading with options. And so the jump from equity options to crypto options just made more sense to me. And one of the reasons why it did make more sense to me is because with options, you have basically a toolkit to operate in the market with your capital in the most efficient way possible. That's actually not possible with futures or perpetual futures products. And what I mean by that is quite simply, in any market condition, you can deploy capital to make money, which is what you're supposed to be doing as a trader. And that really appealed to me as an options trader. At any point in time, any kind of market condition, you could be basically being productive with your capital.
Okay, awesome. Right. And so you just never really kind of delved into like perps or anything.
I have actually.
Oh,
There are some moments where I think actually it makes more sense to put on like a perp trade versus an options trade. But I prefer to trade what I know rather than what I like don't know as much. Um,
awesome.
but
Yeah.
yeah, I
So,
think
okay.
there's one more thing on options. The thing that really excites me with options product is the convexity and the volatility component of this. So if you if you talk to like a regular equities trader, they're gonna think you're crazy trading options on something that has like 100 vol. Well, it doesn't have 100 vol right now because volatility is kind of sapped. But when crypto trends, it really trends hard and you can make the most bang out of your buck with options contracts without the risk of being liquidated for some like scam kind of like wick that happens for some random reason. Um, and the best product to capture that convexity is options.
Awesome. Cool. So could you tell us a bit about your favorite trading strategies then?
Yes. So I am known as like a vol seller. So that is a fancy way of saying selling options contracts to generate kind of like a yield on your Bitcoin or your Ethereum. Um, and then, so that's what I do for the majority of time when things aren't moving. Then there's a time to shut that kind of strategy off completely, just like very recently when we had this move with the BlackRock ETF. There's a time to shut that strategy off completely, um, and start becoming a buyer of options. Um, Mainly because you can see that volatility is super cheap compared to its historical prices. And it just starts to make sense to be a buyer of like an option contract because um, you're betting on basically a move or some sort of catalyst that happens, and we just so happen to get that we just got that catalyst. And I don't know, it was kind of a bet to begin with, but mainly I was a buyer of options recently because things were just so cheap. And then we get this catalyst, right? And then you get like this overnight 700%, 800% return on your options contract. And that is the most satisfying part, in my opinion, of being an options trader, because you're basically the whole market is like, oh, this thing is dead, Bitcoin's dead, Ethereum's dead, there's nothing coming. And as an options trader, you have to think, when is the right time to actually fade that sentiment? Um, and using options is a really good way of expressing that view.
Amazing. Yeah. So it it sounds like it has a lot to do, sorry, with news and kind of trading on the news a little. Do you have any like algos or anything that can, you know, um, well, do you do algo trading at all with that?
I am actually mainly a button clicker. I'm the classic button clicker. But yes, a lot of it is like catalyst trading, because you can capture crypto is one of those, and we have two, like zero DTE, which means days to expiration, like options, which has been really popular. I wouldn't recommend it because it's highly risky and not super liquid, at least in this juncture, and this point in time in the market. But um, if you can, so I'll give you an example. So in 2020 to 2021, um, Elon Musk got involved with Bitcoin, and you can track these large on-chain withdrawals um, from the OTC venue that he chose to buy the Bitcoin from. And you could basically assume that at some point in time, when they have to do their quarterly reporting, that they would announce that they have made like a Bitcoin purchase, right? Um, and by looking at this data on chain, you kind of, and it hasn't hit the news yet. Um, you have to kind of think about like, okay, maybe this will happen or maybe it doesn't happen. The best way I can express this kind of bet, um, with a defined amount of risk, which is the premium that you pay for the call option in this case, because I'm betting that it's going to go up. Bitcoin is going to go up with the announcement of potential Elon Musk purchasing Bitcoin, is with an options contract. Um, that is a good example of like kind of my workflow. I look at on-chain stuff. That's not all I do, but it's one component of it. And who might have been a purchaser of of Bitcoin. Most recently, we had MicroStrategy today. Today is June 28th, announced that they bought some Bitcoin. And last week, or 2 weeks ago, I forgot when BlackRock announced their ETF filing, we saw a lot of activity on chain out of Coinbase. And so we know that MicroStrategy has chosen Coinbase as their venue to buy Bitcoin. And so maybe um, if you wanted to express this view, like, oh, someone's probably buying Bitcoin because of this ETF and it's probably a big player, maybe they will announce something in the coming weeks. And so that you buy like maybe like a monthly call option on that. That's kind of like a workflow for options traders um, that are interested in trading Bitcoin options.
Awesome. Awesome. And then, to execute these contracts, you got to be quick, right? Like, so when it takes the direction that you want to, you're like, oh, do you ever get like stressed out about this? Like, you have to move quickly, right?
Actually, like I'm usually a buyer of calls or puts when the market's kind of like um not doing anything. So you're anticipating an increased like volatility. So basically the market's not doing anything, and then you're buying this contract because you think that the market has mispriced this contract, so the contract value increases. So when things are kind of settled, that's usually when I'm thinking, is there a reason for there to be an increase in volatility? And if I think there is a reason, then that's when I decide I want to be a buyer of this contract. Now you have to decide as a trader whether it's going to be upwards volatility or downwards volatility, but we can talk about that for probably a whole another podcast.
Yeah. I mean, so is there no hedging then in options?
There definitely is hedging, and actually, it's a tool that probably most hedge funds use to hedge. That sounded weird saying that in the same sentence, but Like if you have let's say you have like a whole stack of Bitcoin or a whole stack of Ethereum, and you want to buy basically insurance. A put option basically represents insurance to the downside. Maybe the hedge fund manager is predicting that, we've hit some sort of resistance level or there's some sort of regulation that's looming around the corner that's supposed to be announced by the end of the month. So he wants to spend X amount of money to buy insurance just in case he needs to hedge his client's money.
Awesome. Okay, interesting. So we're talking about kind of news and having to be on things. What do you think about the current kind of macroeconomic situation, and what does that mean for the crypto side?
I think that so I've been watching markets for since 2016, like actively trading. Um, and I've not seen a more dislocated market in my humble 7-year career. Um, Things are literally all over the place. But I think with what happened with SVB in the US, which is basically a banking failure, there has actually been some forms of quantitative easing. So most central banks around the world after COVID had to support the economies by pumping liquidity into the markets. And with that resulted in high inflation. High inflation impacts citizens of every country around the world um, negatively. And so we had to basically calm this down. Um, and now we've gotten to a point where a major bank in the US has failed. And we have this kind of, I don't know how to explain it because I don't think there's actually a technical word for it, but it is kind of like a form of quantitative easing what the Fed has done with the BTFP program. Um, I think what happens from here, today's June 28th,
28, yeah.
2023.
Mhm.
I think we're going to see inflation continue coming down. There are some opinions out there that inflation will have another resurgence. Um, I'm I'm thinking it continues to trend down in a positive way. We might not get down to like each country has its target kind of inflations. Most kind of agree. I think the International Bank has like a agreement 2% is around the target. I think we're gonna land like a little higher than that, like maybe 4, 5, and then I think everyone around the world is gonna call that a victory, coming down from like eights and nines, and
Mhm.
depending on where you're from, right? So inflation, in my opinion, is coming down. Um, Now, instead of quantitative tightening, I think we're actually gonna start because I'm of the opinion that rates are done rising, close to done or actually done rising. In crypto Twitter, you always see around uh, when whether it's the ECB or the Fed talking or Japan, that you always see this like hype around, okay, are they going to raise or are they going to stop or whatever? I think they're actually close to done rising. And in fact, I think the narrative is going to start shifting to lowering rates, regardless of the inflation figures, because we're just about there. Like the banking failure happened in March. It's June, 3 months after. We're still somewhat not licking fresh wounds, but it's still somewhat fresh. But
Mhm.
I think that kind of was the shot in the air of a warning sign, like, hey, I think we were pushing things a little too far here. There were some risk factors to what they did, which might not have been wise decisions, but in the end of the day, it's a shot in the air. So inflation comes down, rates are close to done rising, and QT is still somewhat of the headline, but I think actually in the background, there's going to be some elements of QE coming back, and you might see, and you can argue that global liquidity is actually increasing, which is why risk markets have been rising. You can see Japan has actually made like the Nikkei has been trending upwards for some good amount of time. S&P 500 in the US as well has been doing very well. And then of course, for this podcast listeners, Bitcoin has been doing extremely well off of those SVP lows from 20,000 to 30,000. So you
Mhm.
can say that maybe And I don't want to, influence anybody's trading decisions, but
Yeah, not
things are
financial
starting to look good.
advice.
Yeah, things are starting to look good. And to top it off, I do believe that China is starting to look to start their QE program too, because their economy needs a boost. Um, and so with that, the US is right behind that. We're just tagging along behind everybody, maybe by a couple, or a quarter or a couple quarters. Um, we're definitely the US is definitely rising the slowest out of everybody. And actually, a lot of investor money from the US has gone into the likes of Asia, and particularly Japan. But I am hopeful that the worst is behind us. I do have one canary in the coal mine, and that is a very large crypto exchange that is being investigated by the SEC that could maybe throw a wrench into this thesis. But as long as that kind of doesn't phase out and you acknowledge that risk, which there's always a risk in crypto, um, in general, things in markets are actually looking good, even though they're so distorted. And I actually think that uh, the market is going to the the central banks around the world are going to start loosening up instead of continuing this like tightening regime.
Awesome. Thank you for that optimism. I think everyone needs it.
Yeah, for sure. Uh,
That's so funny. Okay. Okay, I just started a new one. So what was that?
there was just a headline that hit my notifications because Fed Chair Powell was talking and he said, this is a quote, "Don't see us getting back to 2% this year or the next." And he's referring to obviously inflation.
Right, right.
And then on my other alerts from the Financial Times, there's a headline here that says the return of quantitative easing, stocks to be boosted by increasing levels of global liquidity in markets.
Well, I mean, you called it.
I don't know if I I think yeah, I don't know if I'm the first to call it, but
Yeah.
I think people because the truth of it is that the sentiment is horrible. It's horrible.
Mm.
Um, and I wrote a blog post on this on my like personal blog that like why is it so horrible? Um, and why is there no retail participation? Um, and what will it take to get retail to come back? Um, and I think sentiment has bottomed. I don't think we can get lower here. There's only up from here.
Never say
And
that in crypto.
oh yeah, that's true. That's true. That's a good rule to live by. But you can see that like the participation has dwindled, volumes have dwindled, and there just hasn't. This is exactly the point though where things can change, right? When there's no way else but down, you think there's nowhere where else to go but down. There's no actual useful applications of this. You have to remember how far we've come from, um, and what we're actually still building. And when everybody forgets crypto and like the death headlines come out, that's exactly the time where you should be paying attention. Because I'm very confident that, if you're listening to this podcast, it's 2023. I'm very confident in 2026, right? I don't want to say 2024 because that's 6 months away, but 2026, it's gonna be a completely different attitude, right? The Bitcoin halving's next year.
Mhm. Yeah. And then that will hopefully, regain people's sentiment on it, I guess.
Yeah, there's always the excitement around that event.
Mm.
Unfortunately, I think it's usually a sell the news event, but it's usually a blip in the market where when things are trending.
Hmm. Yeah. So actually, could you talk a bit more about, why is sentiment so low? I mean, apart from, all of the big exchanges blowing up or whatever.
Yeah, so I think this started in May of 2022. So last year, just about when we had the likes of Three Arrows, Celsius, Voyager, explode, and Terra Luna. right? There was a lot of retail participants that got caught in this unfortunate unwinding of liquidity. And that hurt tremendous amount of people, a tremendous amount of people. I mean, I have friends that have lost seven figures due to this. And then that was the first kind of domino, right? 6 months later, we had FTX. And then I had more friends lose like north of seven figures. So, and that's just like my small group of friends. Imagine the normal person that's trying to trade on these venues. All of a sudden, the next day, their money's gone. Um, that leaves a very, very bad taste in these people's mouths, right? And their attitude toward this industry. I know people who've turned away and they're never coming back. Um, this is it's unfortunate, right? If you got caught in the crosshairs, you got money stuck in Celsius, right? I mean, so that company, their ethos was you have full control of your money and you can earn yield. Like, be gone with the banks, I think. There's a different selection of words there, but I don't want to say that on a podcast. It was like, be gone with the banks, have full control of your money, and then what happens? I don't have control of my money. I can't withdraw it from your platform. It's stuck. It's frozen. Um, so this leaves a horrible taste, and that's just been happening since May of last year, and it has continued to happen with the recent news of Binance being investigated by the SEC. So, this is it's obviously not striking any confidence in anybody, right? But here's the thing, you have to look at it also as what's the next worst thing that can happen. The SEC is going after the largest exchanges in the world. Is there anything worse that can happen from this? Or after we get through this hurdle, is there only upside to that, right? That's how I like to think as a trader. So like, did the market sell off on this news? And if it did, is it right to kind of do that? In my opinion, in most of these cases, like that just means there's potential upside from here. Like basically the people who sold on the fear that, maybe CZ is doing some sketchy things or they are like trading securities. Like, once we get beyond that, is it going to be more bearish or is it going to be more bullish? Right. And that's how you kind of have to think of as a trader, or at least that's how I think as a trader. And that's how I position. Once I formulate an opinion on that, then I think about what's the best way to construct a trade off this potential catalyst, right?
Mhm. Awesome. Well, it seems like you are quite optimistic about where everything is headed. So, could you tell us about a bit about how you're preparing for your optimistic vision?
So I optimistic is an interesting word. I'm optimistic because at this point we're getting to a point where things are just so pessimistic. Like we're going through all this horrible news cycle. Um, and the thing to note there is like with all this horrible news, have we made new lows in the prices? And the answer is no, obviously. And that to me is like a market that's building some sort of resilience, right? I'm not saying that we're going to zoom to 40,000 Bitcoin tomorrow. Um, this thing can easily trade back down to 20,000 in a month or 2 months. But like the way you could say I'm optimistic because we're airing out all of the pessimistic things now. And we're running out of things to be pessimistic about. So like we have the US government selling the BTC. I think they have to do it by the end of this year. We have, of course, the SEC coming down with their hammer on the two largest crypto exchanges in the world. Um, we have what else is there? US government, oh, Mount Gox, right? That Bitcoin supply is coming into the market. Who's going to be the buyer of that or absorbing that? Um, So it's like to me, I'm trying to think about what I think about every day is like, what's the next worst thing? And we just keep taking these punches as an industry, but prices have been rising this year. So that to me is setting up for a really good backdrop, right? If the collective remaining participants in this crypto market are actually bidding through this horrible news cycle, that's resilience to me, right? Like these are the remaining people that are buying Bitcoin right now at this price are the natives, the crypto natives, the diehards, the people who see the 20, 30-year vision, not the 3 month, swing trade or like a lot of crypto people are on the 5 minute or even the 1 minute chart. Where I'm talking at this point, the remaining people are the 10-year timeline people. And that's what you should be optimistic about. Because if you're still remaining and if you're still left here, that's like you have to remember why you're still here in the first place, right? And we're not at zero yet either with all this happening. So that's a good thing to be optimistic about.
Yeah, absolutely. So, do you have any tips or closing comments for newbie traders at all?
Yeah. For new traders, in particular crypto traders, uh, I think it's really important to trade things that you actually enjoy researching because this market has grown a tremendous amount since 2017 or when I first started. And it's become near impossible for a single person to track um, all these crypto assets. Before it was possible to kind of get a whole idea of what everything's doing. And now it's just become basically impossible because the market has grown so much. So pick something that really interests you or an industry. It could be as simple as Bitcoin, but pick something that interests you and really get intimate with the facts and the people, the players. What might be a catalyst because that makes the trading aspect more fun. And when you're having fun, it doesn't feel like work, and you can do this every single day without feeling, you know, that, oh, I have to do all this research, right? That really kind of, I think, helped me survive because I kind of just played around with things that I was personally interested in. Um, that got me to this 7 year, going on to 8 now almost, career in trading crypto. Um, and last but not least, trade more. This is more tactical. Don't look at your P&L, but look at the chart. Like your P&L might be red, maybe because of bad execution or didn't time the exact entry right if you're trading perps. But instead of looking at your P&L, look at the chart, and the chart will tell you whether your P&L will improve or whether it will get worse, and then you can make a decision based off that. That's my piece of advice to new traders.
Amazing. Thank you so much. Thank you so much for watching this episode, and don't forget to like, comment, and subscribe. Thank you so much, Prof, for your time, and I'll see you next time. Bye.
This was a pleasure. Bye.